David Burrows is here from Barometer, and we're talking North American large caps. And with the annual general meeting underway for Agrium, a big dust-up with Jana partners, what's your take on this tug of war that's going on right now in Calgary?
Well, look, clearly there's a process that's begun. They're trying to uncover value in the business, and it's going to be a drawn-out affair. It's going to take some time. But you know, these things happen when there are investors who believe that there's embedded value, and it's going to go on. The
critics of the Jana proposal to split the company into the retail division and the nutrients division say this is just a short-term thing that Jana is after. They just want the big, quick bump to get in and then get out again.
Right.
Whereas some would also argue that you want to be able to unlock that value. Where do you stand?
Right. Look, at the end of the day, if management isn't doing a great job of portraying value in the market, there are going to be instigators who will step in and try and create it for them. So if the investors have faith in management and believe in their strategy, they'll vote with management. Having said that, there's more and more indication there are activist shareholders out there prepared to make moves.
We're off to Calgary now for Tom. Hi, Tom. Thanks for holding. Welcome to Market Call.
Yes, good afternoon. I have Yamana Gold and a few other gold and silver stocks, and I think about selling it today when it's having a good day, because it seems to drop like a rock from now till summertime, historically almost every year. And also, it doesn't act like it's a stock for crisis. According to what happened during Cyprus, didn't do anything.
Right.
And also, it seems like all the hedge funds are getting out of gold and putting it into gold stocks, and where all the money is going to be made. Okay. Can you comment on that? Thank you.
Sure, Tom. I mean, I can only look at things from our perspective. And at Barometer, our focus is when you're in a decent market, identify what's working and focus in those areas. Try and understand fundamentally why they're behaving well and take advantage of change. We're in an environment where golds have been underperforming, gold stocks underperforming for a couple of years now. And certainly they have been hurt quite badly. Now, there is a case to be made that they're trying to find lows in and around these levels. We aren't bottom fishers, so we don't tend to try and do that. So the golds are having a bounce today after weeks of abysmal price behavior. Seasonally, it doesn't tend to be a great time to buy these things. I prefer to see a meaningful change in price trend before we step in with our capital, because there's been all kinds of false starts in these things. I would argue that what the market is willing to pay for today is clear, well-defined cash flow and dividend policies, and really the golds don't fit into that camp so well. So I would avoid golds at this point, not to say they can't have a bounce, but I think that really they're not very timely.
Thank you, Tom, for the call from Calgary. We're off to Steeltown now. Louisa in Hamilton, hello.
Hello there. I'm interested in your opinion on precision cast parts and whether the airline industry as a whole is going to be renewing its airplanes and requiring parts. Thank you very much.
Thank you.
So, Louisa, there are a few secular themes in the equity market right now outside of this yield theme we spend a lot of time talking about. And one of them is the whole cycle in the renewal of aircraft to the airlines. And so, of course, Boeing is into a new product cycle, and Airbus is working on their product cycle. And really, one of the big beneficiaries are the parts providers, and precision cast parts fits right into that wheelhouse. So, you know, despite the fact that Boeing had a hiccup recently, their production didn't slow. They're actually picking up their production rate. And so we think that the parts suppliers are big beneficiaries in that area. Cost of capital is very low right now, and so the airlines are all trying to become more efficient. And so I think precision cash parts is something that I'd be comfortable in. I don't own it currently.
All right, I see it as a 3-cent dividend yield as well. Yeah. That's a fraction of a fraction here.
Yeah, this is a different type of investor. They're looking for a long-term secular growth in aircraft production.
I see, though, the consensus is the stock will breach $220 in the next 12 months. Do you see 19% upside?
I think that that's not impossible. I think that $180 is important support on the stock. I think if it trades through $195, it's got another leg higher and probably could move another 10-15% higher.
Louisa, thanks for that. We go from Hamilton now to Langley, BC. Gary, good morning.
Good morning, gentlemen. David, I'd like your view on Magna International, please. It's at about a 24-year high. That's,
sure. Gary, Magna has a history of going through downturns and taking advantage of them with their balance sheet making acquisitions, tucking in additional assets, and coming out the other side very strong. So we are in a replacement cycle in the auto industry. The industry is playing catch up. We've got a very old fleet out there. Magna have made great investments. They've targeted markets that are doing particularly well. They're growing their dollars of content inside of cars. This is a holding of ours, one of our larger Canadian holdings. And we don't have a target, but I would say that they're doing a great job of growing both cash flow and earnings. And I think that this would continue to participate in this market. You get a 2.2% dividend yield along with it and a rock-solid balance sheet.
That's 32 cents regular payout. Thank you, Gary, for that. We go from Langley, BC to a commercial break. David Burrows is here, president of Barometer Capital Management. We're talking North American large caps. Call 1-855-326-6266.